A stock opened 89% above its IPO price. Within a day, it was bleeding. That stock is Cerebras, and what happened to it is the most useful risk lesson in the entire AI playbook right now. Almost nobody watching that day understood what they were actually looking at. Let me show you. Cerebras builds AI chips, a real challenger to NVIDIA. The IPO was priced at $185 a share. It opened at $350. Think about that for a second. The professionals who set the price said $185. The market said $350 before lunch. That's a $165 gap. There's an obvious question. If the price was right at $185, why did it open astronomically higher? But here's what almost nobody asked. If $350 was right, why did it close day one at $311? Here's the part that should stop you cold. The next full day of trading, it dropped another 10%. Same company, same chips, same business. So what moved? That's what we're going to break down, because the answer is the single most useful lesson you can learn about AI IPOs right now. Hey, welcome to New Stock Signals. I'm Max, the digital twin of Bill Smith, founder of Renaissance Capital, 30 years, 11,000 plus IPOs analyzed. Bill personally researches and writes every video script himself. I hope you enjoy. He reads every comment, so be sure to share your thoughts below. Nothing in this video constitutes personalized investment advice. Always consult your own financial advisor before making investment decisions. Here's why this matters to you. We can't say yet if Cerebras was a one-off or the opening act. The biggest wave of AI IPOs in a generation is lining up behind it. Enterprise names like Databricks, infrastructure plays like Lambda, tools like ThoughtSpot, and it's possible every one of them does some version of what Cerebras just did. A pop, a fade, a test. If you don't understand the mechanics now, you'll learn them the expensive way by buying at the top of the next one. By the end of this video, you'll know what any AI IPO pop is really telling you. Not the hype, the mechanics underneath it. Let me zoom out first, because this isn't new. I've watched this movie for 35 years. The faces change, the pattern doesn't. Here's the reality. An IPO is usually not a fair fight. It's a controlled release. Big institutions get the bulk of the shares at the IPO price. Then when the stock opens for everyone else, when you can start building a position, the price has already jumped. That gap has a name on Wall Street. They call it the first day pop. Now, Cerebras didn't pop 10%. It didn't pop 30%. It opened up 89%, and it reached a high water mark of 108% that same day. So the obvious question is, why so explosive? Why this one? That's where the real insight lives. Here's what really matters. The size of an IPO pop doesn't measure how good the company is. It measures how badly people want in, minus how many shares they can actually get. Read it again. Demand divided by supply. That's it. Think of it like this. Imagine the most popular restaurant in the city. One table, 10,000 people trying to book it. The price of that one table goes insane. Not because the food got better, because almost nobody can get a seat. That was Cerebras. Let me give you the numbers because they tell the whole story. The IPO was 20 times oversubscribed, 20 buyers for every share available. The company sold just 30 million shares, a deliberately small slice, and a pure AI chip story retail investors could actually buy. The closest thing to NVIDIA exposure minus NVIDIA. Huge demand, tiny supply, compelling story, all drivers behind an 89% pop. But here's the part that almost everyone confuses. They think a pop that big is a sign of strength. More often, it's a sign of a coiled spring. Because all that demand got crammed into the first few minutes. The most eager buyers, the ones who'd pay anything, they bought at the open. They drove the price up even more. And once they were done buying, who was left? The buying pressure was spent. Then the stock did exactly what coiled springs do. It snapped back. It ran to a high of 386, then closed the day at 311. Down another 10% the next day. The company didn't change. The crowd just ran out. That's the key insight. The pop wasn't telling you what Cerebras is worth. The pop was telling you how crowded the door was. So what do you actually do with this? This is the part that protects you as an investor. Pay close attention. First, never confuse a pop with a verdict. When you see an AI stock open up triple digits, your gut says, winner, get in. That instinct is the trap. A giant pop tells you the stock is crowded, not that it's cheap. The bigger the first day jump, the more likely the early buyers overpaid. You're not catching a rocket. You're catching the moment everyone else already bought. Second, separate the company from the trade. These are two different questions, and people blur them constantly. Is Cerebras a real business? Yes. And an interesting one. Real chips, real customers. But is the stock at 386, 350, even 311 the right price? Completely separate question. At 311, it was trading around 130 times its annual sales, a massive premium to most established chip companies based on expectations of flawless growth. Good company, demanding price. Those can both be true at the same time. Third, and this is the one nobody talks about, don't forget about the lockup. When a company goes public, the insiders, the founders, the early investors, they can't sell right away. They're locked up until they're not. Then a flood of new shares can suddenly hit the market. Remember the restaurant. What happens when they suddenly add 1,000 tables? For Cerebras, that lockup release schedule is complex. New shares, more supply, hits the market in smaller waves. And with every wave, the scarcity driving the price gets smaller. So if you're looking at a hot IPO, don't just ask, is this a good company? Ask, when does the lockup expire? And am I buying right into a wall of new shares? That question separates investors who understand IPOs from investors who get run over by them. Now, let me be fair, because I'm not just here to rain on the Cerebras parade. Someone's already thinking, but the stock could keep climbing. Plenty of IPOs pop, fade, and then go on to win big. Completely true. Astera Labs popped 72% on day one when it went public in 2024, gave almost all of it back. Then by the end of that year, it had more than tripled. The fade was an opportunity, not a warning. A pop and fade doesn't automatically mean stay away. It means the entry price needs respect. Here's the honest part. I don't know whether Cerebras goes up or down from here. Neither does anyone yelling at you on the internet. What I do know is the structure underneath it. And the structure says, this stock has real risk you can see. That 86% of 2025 revenue came from just 2 customers tied to the UAE, that the price assumes near perfection, that the lockup waves are coming. That's not a prediction. That's discipline. I'd rather show you the risks clearly and let you decide than pretend I know where the stock closes next month. I don't, and neither should anyone claiming otherwise. So here's where we land. The pop wasn't Cerebras telling you to rush in. It was the market showing you a textbook lesson in real time. Huge demand, tiny supply, a spring that coiled, fired, and snapped back, all inside 48 hours. The pop measured the crowd, not the value. And that lesson is probably going to repeat over and over as this AI IPO wave rolls in. Every hot debut will tempt you to confuse excitement for opportunity. Your job is to filter, ask the real questions. What's the supply? When's the lockup? Is the price demanding perfection? Is this a good company? Or just a good story with a crowded door? That's how you stop reacting to headlines and start reading the machine underneath them. If this gave you a clearer way to see IPOs, do 2 things. First, subscribe. The next AI IPO is already on deck. You'll want to see it through this same lens before the pop, not after. Second, Bill tracks every AI IPO before it prices. Same framework he's used for 30 years with institutional clients. The link to pre-orders for his upcoming book, The New AI Stock Edge, is in the description. This isn't about chasing the next pop. It's about building a system that still works when the noise fades. A big first-day pop never tells you what a stock is worth. It only tells you how crowded the door was.